Hi there, we are in the second week of April and Nifty continues its trend around 22,500. And I'm Sharad over here, and if you've been here for the first time, then we cover weekly news and we also try to form an outlook for the upcoming week, decide on what stocks to pick from momentum trading perspective, and primarily this is a channel to understand the markets well so that I can invest well. But whenever I make decisions, I just try to share my knowledge, and that's the objective. And behind the scenes, I also have a support of my analyst Aman. We analyze the global news, the news at local level, and look at specific stocks. So that's very quickly about the channel. The first part of our news is always about how the markets performed in the week. So this week it remained almost flat for that matter, although there was a little bit of volatility right on the last day. Nifty fell by around 1%, and I think it was also the expected jitters that were there in US later in the day. And overall it just closed flat, but with 27 advances and 23 declines, and if you look at the numbers, FIs was net sellers and significantly large amount for that matter compared to what it has been previously, and DIs bought for 12,230 crores. And as we've been talking about, Indian markets have been sustaining the momentum to a certain extent because of the money that is coming in through the DIs. Now, if you really look at the sectors that really did well, metals for a reason this time it was up by 2.9%, and this is third week of straight rally in metals because of the commodity prices, commodities showing uptrend. Auto also up by 1.16%, pharma down by 1.94%, and media down by 1.46%. So not a very volatile setup from an industry perspective. More or less everything remained within the range. And for that matter, media for the first time not showing neither a very strong recovery or a very steep decline, because media has been trying to recover from the jitters of the Z Sony merger call off. Now, as part of this session, we typically also pick up a quote from somebody who's been doing well as an investor. So, Phil Town is one of the investors and motivational speakers from US. So, this time we picked up a quote from him. What is more important is not who is he, but what this indicates. There's a very powerful this thing that whenever you buy a stock, and primarily when we say that you buy a stock, we also include the momentum stocks or the trading stocks. You're not buying a stock as a stock speculation, but you're buying a business, and if you understand the business well, then it becomes personal. So what he tries to say is that make it personal, make it a business purchase. You're taking a pie of the business, and that is what makes it personal, and you should always make your investments as personal investments. So that's something very powerful, and only if you're studying the numbers well, then you're actually making the decision like that. Now, moving to the next part of it, what was the news this week from a low country perspective in the economic world? For that matter, the TCS results were out, and overall results looked positive, and it did beat the expectations. With profits rising 9.9% year on year, which is reasonable for a stock with this kind of a market cap and this kind of a company size. And it also announced a very good order book and a good dividend payout. So overall, for the TCS and the IT sector, primarily a positive news, and the stock did should do well, or at least consolidate in the range of 4,000 plus in the upcoming week. Now, metal stocks continue to perform good this week on account of China's manufacturing expanding for the first time in 6 months. So it's not just the fact that metals are performing well, it's a very good sign for the overall industry, because China has been one of the reasons that the markets have not been doing that well over the last few months, because there's no real uptick in that particular economy, and if that economy improves like the US economy, then there is definitely buoyancy in the market. So it did improve the demand outlook for commodities, and that lifted the metal prices. So, and the another news that came from aviation sector was the fact that there is the traffic rose to by 13%, coming to 15.4 crores of travel, indicating a recovery in the aviation sector. However, airline industry losses remain significant. So overall, a decent week on the market in terms of the news, and but globally there have been a lot of headwinds. The primary being the fact that the data in the US is showing definitely no signs of recovery from an inflation perspective. So inflation remained high, resulting in the Fed giving an indicator that they're not changing the rate cuts. They're not bringing in the rate cut, which is very essential for the markets to start showing signs of investment cycles to begin. But since the inflation hasn't come down, Fed is not looking to cut the rates, and that has resulted in the market sentiments going negative. And when these market sentiments continue to go negative for for prolonged period of time, the economy can turn negative for that matter, as well as the markets can continue to remain in a more of a negative trend. So definitely not a good sign, and the markets fell by 2.3% on this news. And the overall bond yields in France, Germany, and other European countries rose to new uh, rose because of the higher US inflation. And there's another negative sign that very rich people are selling their shares, and whenever such things happen, there can be two reasons. One is the fact that of course they need the money to make investments at other place, and the other is of course that there can be volatility in the market in the upcoming months. So that's another indicator. Overall, the sentiment of the economy is generally tending towards negative, I would say, because one is because of these conflicts in between Israel and Gaza, and then Iran jumping into the fray, and then the other is of course the Ukraine thing going on, and the fact that despite a lot of effort by the US government to control inflation by providing higher repo rates, the data is not turning out in the anticipated direction, resulting in it not cutting the rates. And if it doesn't cut the rates, then obviously the loan cycles don't begin. If the loan cycles don't begin, people don't buy cars, they don't buy housing, and generally the enterprises don't look to expand through the debt route. So overall, the sentiment is turning negative now. Whether it is indicating a set of a recession or a downtrend can be debated, but definitely the markets will remain volatile and on the negative side in the coming weeks, especially with the anxiety. Although if there are no major this macroeconomic situation changes, then what we believe in the upcoming week, the markets will test 22,000 on the lower side, and then if the news continues to be the way it is today, it might start recovering back to 22,300. But it is definitely, in our opinion, going to test this level of 22,000 in this week or the week next week. So that's one part of it. And overall, I think, as I already said, that there have been a lot of shares sold. So it is indicating that there is definitely a little bit of a caution in the market, and that's what we would recommend, that in the upcoming week be careful with building positions, and if you have high risk stocks, then try to prune the positions, because the coming months don't look as positive as the months that have gone by. So try to make a more conservative portfolio at this point in time, and we will see when the situation permits to make it more aggressive. Now, from a perspective of we also run every day and every week a set of base algorithms which test for the stocks which are showing a lot of strength in price action, the volumes, and then based on that we come up with a weekly recommendation. So the stocks that have made to our list is a long list, which is primarily based upon how the price action has been, whether the support week on week basis, day on day basis, where the stock is taking support is on the higher levels or not, and whether at those higher levels there is volumes or not. So based on this, we then also bring in some of the data which is related to the valuations, primarily the PE part of it, and we look at the stocks and make some recommendations, and we build the positions. Last week we had built our position on JB Chem Pharma. We actually exited it with a 10% profit. This week we have these four on our list: Mahindra and Mahindra Finance. This stock has been on an up move and it is taking supported higher positions. The PE valuations look pretty reasonable, and given the fact that Mahindra and Mahindra, which is an automobile company, is showing a lot of strength, I think we are going to build position in this. Another stock from the sector, which is the Exide industry. Now this has done a lot of run up, but it's still showing a lot of strength. And given the fact that it is almost a monopoly today and the EV space relies heavily on this, we are going to take short-term bets on this. And IEX, one of the favorite stocks of 21, is back and it's showing a lot of momentum. So we're going to take some positions over here. And Manappuram Gold, which is riding on the higher gold prices, is also showing a lot of strength. So 4 stocks for us this week. We might not build positions in all of them, but it's just depending upon how much we invest, we are going to take positions in this. You can decide for yourself. Definitely, if you have queries on how we generate this and how we recommend it, do reach out to us through the comments part of it. So that brings us to the wrap up of this week. Have a good week, and whenever you invest or trade with numbers and with it being a business rather than it being a stock speculation. I'll see you in the next week, and we are also going to cover TCS results in a separate video during the week. Bye for now.